very highly traded assets, such as equity, bond, money market fund, are easy to be tokenized. Or at least if we do the RWAs of them, there is a market, either retail, institution, or a combination of both. However, if it's like tokenization of real estate itself, I actually doubt whether it has like a real case scenario for the usage. Why? Because if you are fractionizing let's say a property, then what's the so-called value associated with that property, or that one piece of that property? So that's one thing. Like whether if people are really doing the trade of it, do they get a rental benefit? Or if they can own that partially and be able to live in that property or use that property, and also ultimately whether the regulators of the real estates of the properties, do they recognize that?
Exactly.
So if it's like tokenization of real estate, I actually think it's a little bit like a fake pinpoints.
Yes.
You ever look up at one of those massive skyscrapers and just wonder who actually gets to own a piece of that? For, well, pretty much all of history, the answer has been a very, very small group of incredibly wealthy people. But what if technology could finally change that? I mean, really change it? What if we could completely reinvent what it even means to own property? Okay, let's really get into this. Forget needing millions of dollars. Just imagine for a second that you could buy a tiny, tiny fraction of a prime piece of real estate. We're talking about owning a single digital brick in this skyscraper and buying it as easily as you buy a share of stock on your phone. That's the wild, revolutionary promise we're going to unpack today.
So how is this even possible? The technology behind it all is called tokenization. Now, I know it sounds super complex, but the core idea is actually pretty simple. You take a real-world thing, like an office building, and you convert the ownership rights for that building into a secure digital token that lives on a blockchain. Really, just think of it as a super high-tech deed that lets you break one giant asset down into countless tiny tradable pieces.
Now, this idea of democratizing access to wealth, it sounds fantastic, right? It feels like the future is already here. But before we get too carried away with that dream, we got to pump the brakes and ask some really tough practical questions. Is this whole concept actually ready for the real world?
And that's exactly where the skeptics come in. You've got experts like Gracy Chen who point out that the hype might be running way ahead of the reality. The promise? Oh, it's definitely there. But the road to get there is absolutely littered with huge and, more importantly, unresolved challenges that you just can't gloss over.
See, it's not as simple as just creating a token. Critics are zeroing in on three massive hurdles. First up, governance. Okay, so you own a digital brick. What rights does that actually give you? Do you get to vote on renovations? Do you have any say in who manages the building? Second, regulation. Our property laws were written for paper deeds, not for blockchains. Right now, most legal systems have absolutely no idea how to handle these tokens. And finally, liquidity. Can you actually sell your token whenever you want? And that last point brings us to this really tricky problem, something people are calling the liquidity paradox. The whole promise, the whole sales pitch, is that this makes real estate super easy to trade, just like stocks. But, and this is a big but, in a brand new market without tons of buyers and sellers, even a few small trades could send the price swinging wildly. And that's the peril. The very investors this system is supposed to help could get totally wiped out. Okay, so with all those pretty serious challenges, you might be sitting there thinking, why even bother with all this? It sounds like way more trouble than it's worth. But the reason this idea just won't go away is that it's not just some cool tech looking for a problem to solve. No, this is a direct attempt to fix some deep, long-standing problems in the global real estate market. And the single biggest problem is access. If you want to invest in premium commercial real estate, the really profitable stuff, you're often looking at a minimum buy-in of $1 million or more. That price tag right there immediately locks almost everyone out of one of the world's most stable asset classes. I mean, the difference is just night and day when you put them side by side. The traditional way, you need a mountain of cash. Trying to invest internationally is a legal nightmare, and a single deal can drag on for months. The vision for tokenization is the total opposite. A global market anyone can enter with transactions that could be settled almost instantly. So you see, this isn't just about making things a little more convenient. It's about tackling real, fundamental failures in the market. It's about finally democratizing access and opening these lucrative markets to everyday investors. It's about smashing the barriers that make international investment so complicated. And it's also about giving property owners a way to unlock some of their equity without having to sell the entire building. All of this, by the way, could be automated with smart contracts that handle things like rent payments and ownership transfers. So we have this powerful, world-changing vision on one side and a set of very real, very serious practical hurdles on the other. Where does that leave us? Are we actually looking at the future of property investment here? Or is this just a deeply flawed idea that's, never going to get off the ground? Well, for every major concern, people are already working on potential solutions. That whole governance problem, you could design different kinds of tokens with different rights, some that get you income and others that give you voting power. And those regulatory gaps, we could adapt the securities laws we already have for things like fractional ownership. As for the price volatility, well, the key there is to build a truly massive global pool of investors. The bigger the market, the more stable it becomes. So here's the bottom line. Tokenizing real estate is a genuinely powerful idea. It addresses real structural problems in the market. But the legal frameworks, the regulations needed to actually support it, they just aren't there yet. It feels like the technology is sprinting ahead while the rest of the world is just learning how to walk. It's an incredible idea that might just be a little ahead of its time. And that leaves us with the ultimate question. Are we really looking at the blueprint for the future of ownership, a future built block by digital block on the blockchain? Or is this just a beautiful digital dream that's still waiting for a solid foundation to be built underneath it? That right there, that remains the $1 million or maybe even $1 trillion question.